My belief is that within the next 5 years, investment managers, asset managers who have not become sustainable will be driven out of business. And that's coming from clients.
That's a great transition, because I just wanted to start this as the last big topic for the discussion. Maybe from the US perspective, Stuart, I know it's ESG is not the biggest topic probably in the US. From maybe the European perspective, and what's maybe the your insights from ESG in the US, and can US companies, even very big asset managers, learn from the European companies at least once, maybe, as already mentioned, in a decade?
Well, I think it is an enormous trend, and I would absolutely say that it's further along in Europe than it is in the United States. But in the United States, it's coming fast. I think with the Biden administration, it might even come a little bit be accelerating from here. So it is important to us. All of our asset managers are creating creating products, but also figuring out how they want to position themselves in a world where it's increasingly important that you factor in ESG factors into your investment process. And we're very far along in that in our fixed income area, where we have virtually every one of our securities is rated from an ESG perspective. Our quant equity side is doing the same, and then obviously in our private businesses like real estate, we're already doing quite a bit in terms of impact investing and the like. So we can say that the U.S. is behind there, and I think that's true. But I think it's accelerating quickly.
I may add to this from a European perspective or a German perspective. I think what everybody should be aware of right now is not getting too excited about this whole sustainability issue as a marketing, going forward. And because we don't want to produce our Dieselgate in the financial industry by promising things which we can't deliver at the end of the day. So I think everybody has to keep this in his mind. When we looked at the at sustainable investments and sustainable strategies and funds, 2 years ago, we were surprised by kind of the information which was given to us by the market and financial firms, and we just decided we have to build the whole process from scratch for our own, because we can't rely on external information because it doesn't work. I hope that going forward, the quality will change, and so we can do really sustainable investing. I think we should be very aware of that. If you launch funds and claim you're kind of an ethical investor, that doesn't work, and it does not work. No way. But if you go to clients and sell them an ethical product, there will be some disappointment in the future. So I think this is something we have to be aware of. I think sustainable investing is a fantastic thing, doing in the proper manner. So more like the ESG, the typical long-term stock picking approach, and active ownership is something very important. Doing engagement, not sitting in your office reading an annual report, but really talking to the management, being an active owner, and basically helping the company to become better in the future. Something we really, really like. Looking forward to find more of investors doing this and fund managers doing this in the future, because this is really adding value, and this is really fostering proper change, and this is good change. Forcing management of companies thinking long term, not short term. Being incentivized to have a good governance, to have social and environmental issues, on their risk and roadmap. Managing their company. That is fantastic. So this helps everybody and delivers good performance. But we should be aware that it's not the solution to everything. But I think it's a very good development, and we are doing a lot of effort to come up with good solutions there.
I think it's important that, to me, that's not a gimmick, but we need to be serious about it. So we need to have one of the issues today is that in Europe, as an example, you have labels for almost all countries and different labels in different countries, which means different criteria that are being used. So we need to come up with something that is easy to understand, which is very important. The second aspect is that, first of all, I think that we need to convey to our clients that it's a good idea, because when you're going to have 1,500 billion euros invested into ecological transition every year for the next 20 years, I'm sure that this will bring opportunities, and very good opportunities, for investment. And third, we are 60% of our business is institutional. So we're going to RFPs to institutional clients in Europe. More than 80% of the RFPs that we have from institutional clients in Europe now are requiring extra financial analysis criteria, which is not only environment, but also the governance that you described, so that we put pressure on companies to have the right governance in what they do. So I believe that's one of the key trends. We need obviously to have a set of criteria that is homogeneous across continental Europe or the European Union. But again, that's a trend I think that is there for good, and for one good reason, because there are fantastic opportunities for investment. And yeah, that's my belief.
Yeah, absolutely. And I think setting up the right ESG strategy or setting up the right filter, and I fully agree to Nicolas that we have to find the right guidelines, and we have to come up with more transparency. But I think this ESG approach at the end of the day will not lead to a kind of expected return boost, but it will lead to an appropriate risk management. Because the idiosyncratic risks, the company-specific risks, they have visibly risen over the last weeks, months, years when the ESG topic came into the discussion. And I think this is something we have to bear in mind when it comes to defining the investment strategy on the bottom-up level.